Good morning, treasurers. This is your host Parthesh Shah from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into the trade for 11th May 2022 in the international market. Today's big event: US CPI expectation. Few economists are predicting the peak of inflation, and hence we may see a first cool off in the CPI print. US 10-year, with the expectation above mentioned, is trading below 3% already. Expect volatility based on the CPI numbers outcome. In the crude oil market, crude is trading at $103.80 per barrel, short-term range for crude 102 to 107. In the currency market, dollar index or DXY is at 103.89. Today's range 102.97 and 104.15. We do not expect dollar index to rise further, and there is a very good probability of dollar index cooling off further, going below 103. USD CNY or Chinese yuan is at 632. USD INR with a high of 77.20 closed at 77.33. Trading range: resistance at 76.90 and support at 77.49. Trading strategy for USD INR: night research success. Let's talk about that first. So we had mentioned yesterday that the RBI intervention may come at 77.50 and 77.50 is not getting breached. Indeed, the low for yesterday was 77.45. At the same time, we also mentioned that 77.20 is on the cards and we may see it today, and actually the day's high was 77.20. Now, we expect that the US CPI may take the USD INR to the next level based on the US CPI outcome. Indian CPI is on Thursday, and hence expect volatility in the USD INR in the next 2 days as well. We do not expect USD INR to cross 77.50 very soon at the same time, and hence we ask you do not go long near 77.50 as RBI may intervene once again. In the domestic market, yesterday was a relief day for Indian bond traders. Rumors in the markets are: number 1, government is working with RBI to bring the cost of borrowing down. Number 2, RBI may step in with OMOs to control the yields, probably after the CPI print. With the above expectations, a market-wide short covering was seen ahead of CPI numbers due on Thursday. Across the yield curve, yields were down by 15-16 basis points. Market expectation is, after the worst CPI numbers, RBI may announce OMOs and support the market. Globally, crude is within 110 for a month now, and US 10-year is also below 3%, which are supportive for the market for the shorter run. 574 2026, the 5-year benchmark, closed at 708 versus 703, a whopping 15 basis points gain in just one single day. 654 2032 closed at 730 versus 746, 16 basis points in a 10-year benchmark in just one single day. 667 2035 closed at 750 versus 765, again another 15 basis points. Hence, across the yield curve, the yields were down by 15 to 16 basis points and people had a relief. The trading range for 654 2032 seems to be 724 to 735. Night research view: avoid placing any large bets on the market ahead of the Indian CPI. Buying call: remember we had advised our clients who are cash rich to start buying 5-year paper after 712. One can look at squaring of the position below 705 today with 7 to 15 basis points gain depending on the entry or the average price. Once again, we make money with our smart calls. That's it for today. See you tomorrow with the new episode from Night Snippets.